Well, hello everyone, and welcome to our free monthly tax webinar. We are thrilled to have so many of you joining us today, and on behalf of our Commissioner, David Geragano, the Taxpayer Education Service section, and all of our staff here at the Tennessee Department of Revenue, we want to thank you for tuning in. My name is Jeremy Kane, and I'm with the Taxpayer Education Division, and I'm being joined today by Billy Trout of Taxpayer Education. I want to thank Billy for joining us today and helping. And we also have a special guest today. We are thankful to have Jeff Foster. He is from our legal division, and so he's going to be joining us on the panel this morning to offer in what I would call expert insight. And we as well have got our Assistant Director of Taxpayer Services, Dan Vincent, and he will be helping us run things behind the scenes this morning. Today we are actually going to be, let me get the, let me get this back to the starting page here. We are going to be going over the 2026 legislative updates. A few things before we get started. Just want to make sure that anybody who is having any kind of audio issues, if you would just leave and then re-enter, hopefully that can be resolved, and you can always contact the WebEx support. We are going to be using closed captioning in today, and so today's webinar. So if you want to use the closed caption feature, all you got to do is at the bottom of your player, you will see a option to turn that on. Of course, we have these recordings. They're going to be in our webinar video library. And for those of you who are needing a CPE credit, if you will stay till the end, you're going to be presented a form whenever we finish this. It'll pop up on your screen, and you'll just fill that out. Make sure to fill all the questions out for those who are wanting that CPE credit. And then we have here as the QR code for the webinar, as well as in our chat, we have posted the link to make sure that you're able to view that QR code. And so 2026 legislative updates, this is going to be a overview of all of the changes that happened throughout legislature into the fiscal year. And so we're going to be covering many different topics. We are definitely planning on having some time at the end where we can review some questions with you and hope to, get those squared away. Try to make sure that your questions are in regards to the topic on hand. And let me go ahead and get into the overview section. And what I would actually like to do today is, since Jeff is going to be joining us, I'm going to actually turn over to Jeff, letting him present today, and I'll be jumping in and out as needed. But we just want him to have the freedom to share what it is that he's got on this here topic for us today, as he is the subject matter expert on it. And so, Jeff, we're thankful to have you here today, and I'll go ahead and turn it over to you. Okay, sir?
Absolutely. Well, thank you, Jeremy. Thank you very much. And it's a pleasure to be here, presenting the legislative updates to all of you. And thanks for tuning in. To kind of introduce myself a little more, I started with the department in 2007 in the hearing office and moved over in 2010 to the legal office, and I've been here ever since. And I work on a wide variety of taxes, sales and use, franchise and excise, and administrative matters, all sorts of things. So at the very least, I've been around a while, so hopefully that provides help me provide some kind of insight. And I've also done this particular program, both in a webinar form and when we used to do it in person at the universities. And so I have some perspective on the workings of the legislature. And some years it's really, really chock full of stuff, right? Just sweeping changes and all sorts of things. This year was not one of those years. This year was much leaner, and that really makes sense, right? With the Lee administration being in its last year, they were just less aggressive about trying to introduce new tax measures with the new administration coming in, whoever that might be. So it's totally understandable that this would be sort of a light year, but nevertheless, there are some interesting matters to talk about, and in the overview, you can kind of see what the legislature was up to generally this session. We've got sales and use, franchise excise, some stuff to do with vapor, some hemp measures again, and in addition to the miscellaneous matters and the administrative matters, which we'll all talk about. And as Jeremy indicated, I think because was a relatively light year in the legislature, that we will have some time to entertain some questions at the end. So if you guys have something on your mind, hopefully we will have plenty of time to address those questions. So having said that, let's just move it on, if you would please, sir, to the first slide or the next slide. So one thing I wanted to point out, or we can go back to the summaries just for a second, Jeremy. One of the things I wanted to point out on our webpage, and this is really helpful. It came in a few years ago, and we actually have summaries of all the bills that become law in the session, all the public chapters, and they're nicely laid out in these legislative summaries. And you can click on them, and it'll give a summary, an overview of the public chapter, and it also provide a link for the public chapter itself. So if you wanted to go actually read the law itself, it's readily available, and it's really a terrific resource. We have a number of sources of information. The important notices are a big one, of course, but legislative summaries are really, really great. And I highly encourage you to look into that and to use that valuable resource. So next slide, please. Thank you. All right, let's just jump right in and start with sales tax. So I'm sure all of you know that sales and use tax is really the big revenue driver for our state, right? It accounts for a little over 60% of all our collections, which is just a huge chunk of the budget. And it really kind of has to be that way in that Tennessee does not have any personal income tax. We used to have a limited income tax on dividends and interest from bonds called the Hall, but even that was repealed a few years ago. So really, sales tax is by far the biggest revenue generator for the state. So we had a couple of sales and use tax measures that passed this session. The first one I want to talk about is Public Chapter 602, there at the top. And this public chapter is really related and tied into the fact that the federal government stopped making pennies in November of last year, November of 2025. And I'm sure you've heard about this in the news. Pennies remain legal tender. It's perfectly fine to pay for stuff with them, but we're just not going to make any more of them. The federal treasury is done with making new pennies. But the cessation of making pennies kind of raises the question of how the sales tax should be handled on cash transactions as the penny supply begins to dwindle, and certain retailers, from time to time, lack the ability to make exact change on cash transactions. So this bill answers that question, and what it essentially does is authorizes the retailers to round to the nearest nickel if they're not able to make exact change, um, after the price and the tax are calculated. So, and in the bill, it specifically sets forth the rounding rules, and I won't go through all of those. They're available in the bill and in an important notice that we have on our website, number 26-01. But essentially, what happens is the sales tax, the calculation of the sales tax remains the same, right? So that doesn't change at all. The current method of calculating the sales tax is exactly the same. So you do that, you get the sales tax based on the price, then you get that total, and then you use the parameters to round to the nearest nickel if the vendor doesn't have change. So it's just again from a strict standpoint, there's really no change in how the sales tax is calculated, but it just authorizes those retailers to round up, understanding that, in many instances, especially going forward, they're just not going to be able to make the exact change. So, like I said, there is an important notice on our website, number 2601, which explains this, and it gives some concrete examples as to how this works in practice. So that is would be interesting to check out. So that's our first sales tax measure. The second one is Public Chapter 1014, and it really deals with the local option sales tax. So I think to kind of make this make sense for those of you who aren't maybe intimately familiar with this, let me set the stage about how the sales tax works in general. So the sales tax in our state really has two components. First is the state sales tax, and it is levied on the sale of tangible personal property and enumerated services. Okay. The rate is normally 4%, but there are special rates. Airplane fuel comes to that's a special rate. Another special rate, and it's tied into this chapter, is food and food ingredients. So we're not talking about prepared food. We're talking about like food and raw food ingredients. And those are taxed at the state rate, at the state level at 4%. So that's one sort of aspect. It's the state sales tax. So you couple that with the optional local sales tax. Now, this part of the law authorizes counties and cities to adopt a local sales tax, and the maximum rate is 2.75%. So the maximum rate you can have is 9.75 if you combine the state and the local. Now, the way this works, the county has priority in setting the local sales tax, right? So the county can come in and adopt the full rate, the 2.75. And if it does that, cities within the county cannot adopt their own tax. There's no city tax. They do get a cut of sales, the tax from sales that occur in the city, that they receive an allocation on that, but they don't have their own. And most counties have adopted the full rate. I don't know exactly how many, but I think the overwhelming majority. But there are still a few that haven't. So that leaves room for the cities within the county to come in and adopt their own rate. So that's kind of how that works. So in 2024, the legislature came in and enacted a law which enabled cities that had enacted a separate sales tax. So those would be situations in which the county had not gone all the way up to 2.75. The city had come in and adopted its own tax. In those situations, the legislature authorized the city to either exempt food and food ingredients altogether or to tax them at a lower rate. So that happened in 2024. To my knowledge, the only city that has taken advantage of this and acted on it is Hendersonville, and they acted on this legislative authorization. So that happened a couple of years ago. So this year, the legislature sort of built on that and passed Public Chapter 1014. And what it does, it authorizes a county with a metropolitan form of government. So, the big one is Nashville-Davidson County. There's a couple of other smaller, Moore County and Lynchburg, I believe, is one. But we're really talking about Nashville and Davidson County here. And so it authorized Metro to either reduce or eliminate its local option tax on food and food ingredients, as long as it was done by local resolution. So that authorization had to be in place because the current law would not have allowed Metro to do that. So Metro took up the legislature on its offer, and this year passed a resolution that has lowered the food rate from 2.25 to 1.75. So hopefully, that will provide some relief to Metro residents who are buying groceries and food items like that. And this is going to take effect on October 1st of this year. So anyway, that is the story on that one. I should also point out, though, that the food and food ingredients are still going to be subject to the surcharge that was passed along with the Transit Act. So it's while the local option on food did decrease, I think the surcharge still applies. So the effective rate will be 2.25. So that's all okay. Actually, we do have another sales tax. And this is a very, very interesting one from a legal perspective. So the way the sales tax works in general, it's imposed on the sale of TPP, right? Tangible personal property. In general, almost all of that is taxed. With regard to services, though, the services have to be specifically enumerated in the statute, or they're not subject to sales and use tax. So this year, the legislature imposed a new sales tax. It's on the service of transmitting money from a location originating in Tennessee to a location outside the United States of its territory. So this is a new tax, subject to tax before. It applies only to licensed money transmitters, and these are entities that are licensed under the Tennessee Money Transmission Modernization Act. So think your Western Unions. That's a big one. The banks, these entities that can be used to send money. So from a location originating in Tennessee, what that means is either a customer who comes in to a location and authorizes the transaction, or it can be done online as long as the IP address is located in Tennessee. So the tax rate, it's kind of a staggered or sort of thing. The tax rate is $10 per transaction. That's going to be no matter what. But for any transactions that exceed $500, an additional 2% tax applies to that amount in excess of $500. So again, this is a brand new tax. They the effective date of the bill is January 1st, 2027. The thing to know about this is that this law has already been challenged in court on federal constitutional grounds. And the argument is that under the federal constitution, the commerce with foreign nations is consigned and given to the federal government. So the issue is whether this law runs afoul of that constitutional provision. So the case has already been filed. It's a facial constitutional challenge to the law, which means it's not just before a regular chancellor, as any other sort of normal tax legislation would be, but instead it's going to be heard by the special three-judge panel that has to be convened to hear constitutional challenges to state laws. And that law came in a few years ago, 2 or 3, 4 maybe, but that's how this lawsuit will proceed. And I'm not sure if the panel has been convened yet and who the judges are going to be, but that's the way this is going to be handled. So this will be interesting to see how it plays out in the courts. And we don't know yet, and the litigation is just getting underway, but we shall see how it goes. But the thing to know is there is a pending constitutional challenge to it that has been filed. All right, moving on to franchise and excise tax. Again, most of you probably know this franchise and excise tax, or F&E as we call them in-house here, is very, very important taxes. In tandem, they account for about 20% of the revenue collected, so very important taxes. The excise tax is a species of income tax. It's calculated by starting with federal taxable income, and then you've got some Tennessee adjustments, and then for entities who do business in more than one state, the tax base has to be apportioned. The franchise tax is based now only on a portion net worth of entities who are subject. And entities who are subject to the tax are basically any entity that gives its owners limited liability protection. So think of your corporations, your LLCs, your limited partnerships, business trust. Think entities like that. So that's basically what franchise and excise tax is. So the first measure that we'll talk about is Public Chapter 616, and it deals with an exemption that we refer to here, is commonly referred to as the FONCE, F-O-N-C-E, and that stands for Family-Owned Non-Corporate Entity. So basically what this exemption does, it allows these family-owned non-corporate entities to engage in certain limited activities, and that's basically farming and passive investment income. And if they limit their activities just to those, they can be exempt. So historically, the definition of family-owned for this exemption has been very, very strict, right? And it was limited only to essentially lineal descendants. So you start with one person and you can go up to a parent or down to a child. It covered siblings and spouses, but that was it. That was the definition of a family member. So this public chapter broadens that to include first cousins. So it sort of expands the family tree, if you will, and makes the exemption available to more people. It also allows the entity to be owned by a trust, trusts that are established for the benefit of such relatives, and that's new. That was not a part of the law before. So it's trying to make this exemption just available to more broadly to more entities. And it is going to be effective July 1st, 2026. So that will provide greater protection and exemption for these types of entities. The other F&E measure that we had this year is Public Chapter 1009. And it deals with the calculation of the community investment tax credit. So there's a couple of different types of this credit, but essentially it is a credit available to financial institutions, and that's a specifically defined type of entity for F&E purposes. I mean, think banks. It's what you would imagine, banks and credit unions and entities like that, who are making loans to entities who are investing in economically disadvantaged areas, who are providing financial support, financial services, loans, credit, things like that. So this particular type of the credit is for financial institutions making qualified loans to community development financial institutions, the CDFIs. And these things are certified federally. They're on a federal registry. They have to be available to be eligible for the credit. And if the FIs make the loans to them, they can be eligible for the credit. Now, there's a couple different ways that the credit is calculated. One is if it's on an annual basis, you can take it all at front if you want, but if you take it annually, the law used to say that the only way that you could calculate it was at the unpaid principal balance of the loan at year end. So the financial institutions really didn't like this because it was uncertain, right? You didn't really know sometimes what the balance was going to be at the end of the year. Someone might pay down. You just never really knew. So the legislature heard that. They came in and provided more flexibility. So this allows it to be based, instead of the unpaid balance at the end of the year only, allows entities to use the month-end average, right? So you would average what the loan balance is at the end of each month, and then take the average of that, and that would be what the credit is based on. And again, it's trying to provide the institutions with more flexibility, with more predictability. It's trying to smooth out the credit so it doesn't come all at the end or is hard to calculate. All right, let's change gears a bit here and talk about just some kind of miscellaneous updates we have here. Public Chapter 743, and this deals with the litigation taxes. These are small taxes that are levied on essentially the privilege of using the courts. And there's all kinds of them. They're applicable to all sorts. They're criminal actions, civil actions, divorce actions, all sorts of things. And they're small taxes, and they're collected by the county clerks when people use the courts, and then submitted periodically to the Department of Revenue. So this law, it requires the court clerks, on request by the state treasurer, to submit quarterly reports to the Treasury and the Department of Revenue on the amount that they've collected, the amount that they've suspended, and the amount that had been waived. So I think what is going on here, that there's been the counties, there are differences in their resources, and clerks do business different ways. So I think that there was some significant disparities in how this was being reported and how it was being remitted. So this enables the legislature at the Treasury to keep a sort of a better eye on what's going on and the collection and the remittance of these taxes. So that's Public Chapter 743. Moving on, we've got Public Chapter 979, and this deals with the local occupancy tax. So this is a local tax that counties can enact that taxes the privilege of staying in essentially a hotel or an Airbnb, or something like that, a bed and breakfast. And so the tax is local. It has to be, it's legislatively authorized, but then the local jurisdiction has to come in and pass a resolution or an ordinance to set it up. So this Public Chapter 979 authorizes a county that has itself declared a state of local emergency, or if it's subject to a state of emergency or disaster declaration by the governor on a statewide, a broader basis, to provide local occupancy tax relief to people who have been displaced from their homes as a result of the emergency or the disaster, and to give them relief from the tax. And the tax can either be waived by the hotel or other establishment, or if it's charged, there's a mechanism for the customer to receive reimbursement. It has to be done by resolution. The county, it's not automatic. The county has to decide to do this, or executive order from the county executive. And there's a limited window on it. Can only extend for 14 days. So we've seen this sort of thing, right, in sales tax relief a few years ago with the floods and tornadoes and stuff. We've seen it on building materials and things like that. And that's the legislature responding to, these kinds of situations and trying to give some relief for it. All right. Oh gosh. Vapor products. So this Public Chapter 1126 builds on the major revamp of all of the stuff that occurred last year. And this basically, the definitions were really overhauled last year. And when that happens, what tends to happen is when definitions are changed legislatively, people tend to react to that, right? They'll see, okay, if this specific thing is prohibited, then I'll make something that is close to that. It's a derivative of that. It's an analog of that, but it is not specifically prohibited under the law. So that's what we're seeing this year. And so you've got these new products that contain synthetic nicotine, liquid nicotine analogs, and they weren't being subject to tax because they weren't specifically included in the definition. So the legislature saw that or perceived a problem with that and came in and broadened the definition to sort of catch this stuff. So that's what's happening with Public Chapter 1126. All right. the hemp-derived cannabinoid products, Public Chapter 1127. So this builds on the major revamp of hemp law that occurred last year. And that law, if you'll remember, did a number of different things. It tightened the definition of hemp products and outright banned certain types. It prohibited online and vending machine sales and limited sales to places where alcohol could be sold or where the operator held a license. It established a registry for hemp dealers, similar to those for tobacco and alcohol, and it completely overhauled the tax regime. There used to be a 6% tax at retail, and it did away with that and established the tax at the wholesale level. So this builds on that legislation from last year, and it imposes an additional tax on this inhalable liquid hemp-derived cannabinoid products that are equal to 10% of the wholesale costs. So the way this shakes out in practice, these products are subject to the $4.40 per gallon existing tax that came in last year and the new 10% wholesale tax. And this is going to be effective July 1st of 2026. So again, we're seeing this whole evolution of the law trying to sort of get a better handle on hemp products. All right, the last thing we'll deal with is some administrative updates. And that's Public Chapter 653. And this kind of reminds me, in the old days, there used to be something called a technical corrections bill, and it would come in and just clean up things that were in the code that were in the wrong place or didn't make a lot of sense, or it wasn't necessarily big substantive changes, but they were just trying to clean up things that were out there and that kind of needed to be cleaned up. It's kind of a housekeeping bill. So that's what this really is. The first thing, it clarifies. So to go back for a second, the law that authorizes taxpayers to file suit requires a copy of the assessment to be attached to the complaint when the lawsuit is filed. And if the plaintiff doesn't do that, then the court cannot hear the action at all because it doesn't have subject matter jurisdiction. And the department represented by the AG can come in and file a motion to get rid of it because of that. The statute that sets that out says it had essentially a typo in it. It said the notice of the assessment must be attached to the notice. And it was supposed to have said complaint. And I think people understood this, but it's still a mistake that needed to be taken care of. So that's what happened here. It just clarified that to clarify that the notice of assessment has to be attached to the complaint. So that's the first bullet point. Then it just codifies current practice relating to the administration of liquefied gas tax. It's just sort of saying that they'll be treated like other motor fuel dealers in terms of reporting and remitting. It does the same thing for hydrogen gas dealers. It says they're subject to the same permitting, same tax filing as the other motor fuel. It relocates some sales tax definitions and deletes others that were duplicative, because the sales tax code has always been, it's kind of challenging because the streamline measures, sometimes it's confusing when the streamline definitions are supposed to come in sometimes. So this is helping to clean that up and make it more clear. Another example, it replaces the term volunteer seller with CSP compensated seller, and that's just another thing to make it consonant with the streamline project. And I guess the kicker at the bottom is it does not alter any requirement for taxpayers. It's really not legally substantive in that way. It's just trying to clean up the code and to prevent confusion. So I believe that is all. Jeremy, that is the end of our slides for today. We've got some time left, so happy to take questions if anybody has anything on their mind.
Yeah, I'm going to turn the chat on for our participants and those attending today so that they can begin to bring in some good questions for us. And we'll try to sort through those and get as many of those questions answered. And always takes a moment now they can begin typing out the question. But Jeff, we definitely thank you for such a good, thorough explanation of all those topics. You break it down in a very good way for us. And Kristen, she asked, will the slides be available for download? They absolutely will. And so you're going to see in the link above you, Kristen, that Billy posted earlier, there is the link where you can download all of this material and have this PowerPoint available. It looks like I see Mark has asked the question, could a partnership or S Corp qualify as fonts? I don't know if they've changed any of that yet. Would that qualify?
Well, certainly a partnership would. An
Partnership.
S corp, that is a good question. I'm not, an S corp is a type of corporation. Federally, it is taxed differently in that it's not taxed at the entity level for federal purposes, but the owners pay the tax. I don't know that I've encountered that, and I would need to look into that. But certainly a partnership, something that is classified as a partnership for federal purposes, an LLC or an LP would. So that's a very good question.
Very good. Let's see. And Billy, he has put the material link back here in the chat for us. And so hopefully you can now see that there. Let's see. We see another question here asking. Go ahead.
Jeremy, just to also let people know, we are recording this, and this will be
Yes.
posted on the website here in a day or two.
Yes. Excellent point.
Absolutely.
And we have Matthew asked, is the HA 7001 expected to be codified into law in August? I'm not familiar with that specific bill. And Jeff,
What was the public chapter number?
HA 7001. And we may not have the specific information on that one available if it wasn't mentioned in this morning's presentation of what we had our notes ready for.
I don't. Yeah, I'm looking at all the public chapter numbers. I really don't see that particular one.
Hey, Jeremy, while we're doing that, there was an interesting question here that Stacy had. I'd like to bring up. Public chapter 1035. The sales tax on the $10 per transaction, 2% over $500 that Jeff was talking about. We have worked on the sales tax return to revise it, and it's currently being reviewed. So that when this does go into effect well in advance, we will update all that information and share that with software providers and all that kind of good stuff as well. Okay.
Yeah, we got several questions here about the wire transfers coming in, but we'll kind of refer to what Billy said there. Let me see what else we can find. And Billy or Dan, you feel free to help in with any other questions you see that I may be overlooking.
I'm looking at a few right now. Sonia asked, is CPE credit available? Yeah, absolutely. At the end of the webinar, Jeremy will tell you to basically hit our survey and request your CPE. And also don't forget to put the exact name that you want on your CPE certificate to come. And we'd be glad to help you out on that.
Bernadette, she's asked, do hemp retailers still need to track the different types of products for filing the sales tax? Or since the new wholesale tax is in effect, can it be filed in a lump sum on the sales tax?
That is a very good question, and I would certainly need to look into that.
Okay.
Absolutely. Happy to get back. But that's a good one.
Going through these, let me go back up. Should any document, Brad asked, should any documentation be provided attached on the return to the Department of Revenue for the community investment credit monthly average balance?
That is a good question. I think there's probably a worksheet or something that audit has created. I can ask them about that. I'm sure there's a way to, you know, a form or a worksheet or something to calculate that. A similar measure came in last year with the other kind of community investment tax credit. So that might be out there. There's two slightly different types. They're very similar. So that, you know, be interesting to see if that worksheet or anything is out there.
We had one good question here from Danny, and it says PC 1035 applies to licensed money transmitters. Are licensed money transmitters defined somewhere in your legislation?
Yeah, so they're going to be the entities that are licensed under the Tennessee Money Transmission Modernization Act. And the legislature was careful to limit that because they didn't want it. There's a definition of financial institutions for F&E purposes that is they didn't want there to be confusion or overlap with that, so they specified that it had to be under that act. So it's only entities that have to obtain a license under that separate act.
And Dan, he has answered here a good question for Robin, the list of relationships for the fonts exemption. And so those of you who are able to look through the chat, you can see here he's went through a very detailed answer on that. We see here, Latoya asked, service-based taxes that you mentioned earlier in the presentation are only taxable if enumerated. Okay, so what does this mean specifically? So basically, Latoya, this is just meaning that if enumerated or service-based taxes, only if mentioned by the law will they be subject to sales and use tax. Otherwise, a service-based tax is not going to be subject to sales and use tax. And so sometimes it just depends on what's happening. Say if someone is working on a vehicle, well, they're at that point, they are doing some type of maintenance to a tangible personal property, and enumerated by the law, that does become a sales taxable service.
That's exactly right. In general, for sales tax purposes, services are not taxable unless they are specifically enumerated as taxable. And that's the opposite of business tax. For business tax, services are generally taxable unless they're specifically accepted or exempted. So yeah, it's kind of the flip side.
And Monica, she says, so the tax, talking of the transfers, so the tax doesn't apply to bank wire transfers out of the country. Would bank wires fall under that?
Yeah, I think they would. I think
Okay.
they would. If the banks are licensed under that Tennessee Money Transmission Modernization Act, that they would, whoever is licensed under there, um, would have to collect the tax and remit it, assuming that it holds up in court after the court case.
Yeah, and this is a very popular topic. I think a lot of people are beginning to see how it can apply, and so this may be something that in the future we can expand upon and help bring greater clarity to through a webinar specifically for that potentially. But we see here, Karen asked, we use a broker located outside of Tennessee for international wires. How will the sales tax on wire transactions affect us?
So yeah, I think it is going to be based on where the customer places the order. Like the customer can come in to the brick and mortar, but if I believe it, if the customer places the order from a computer located in Tennessee, then I think that's how it works.
Okay.
So Jeff, that essentially in that scenario there, these out of state wire transfer places, in theory, are creating nexus by having Tennessee customers. Would you agree with that statement?
Yeah, I think that's fair to say.
Yeah, that's very interesting. That would be a new thing for sure. So definitely worth thinking. And like Jeff mentioned earlier in his presentation, there are some challenges in this particular area that probably will be, in fact, will definitely be decided in the near future. And when that happens, if there are changes necessary to this, the department will put out information about that, make any necessary adjustments, et cetera. Or if the court decides to eliminate this, possibly, then obviously it's a solved issue and it won't take effect, but we'll have to publicize that as well. So stay tuned on that.
Very good. And Jeff, do you happen to know, for Danny asking about the uh, bank wire, she followed up with, do we happen to know what the court case number was for that?
Let me see if I can pull it up.
And Sheila, just go ahead and answer your question. Yes, we will have these presentation slides available. You'll be able to go to the tennessee.gov /revenue website, and there, if you click on tax webinars, you will see today's presentation, and you'll have the downloadable materials that you can obtain through that. Absolutely. This entire meeting, it will be uploaded. It'll be available on the Tennessee Department of Revenue's YouTube page as well, if you want to give that a follow, just to be able to see all the content that we put on there.
Yeah, so I pulled up the complaint. The style is Financial Technology Association versus David Geragano, commissioner, and the case number is Davidson County. It's 26-0753-3I, Roman numeral 3I. So you can find it that way.
And as far as anything else, Billy, Dan, Jeff, if you see any other questions that I've missed, we've just tried to really hit the common themes here in the questions. Some do get into things, as Dan stated, we can't really comment on local government taxes if it's not state law, as far as we know. So if we're just trying to really cover the things that are more on the state side of it than the local for some of these specifics. And
I think that's pretty much it, Jeremy and Jeff, as far as that goes. There's a few that we did not address. So we put in the chat there our email address, which is revenue.support. So this word revenue and then a dot and the word support at tn.gov. We want you to email us, and then Jeremy is showing that on the screen right now. And as far as the other contact information, Jeremy will talk about it too. But yeah, we'd love to answer your question. If it doesn't have an answer yet, like if we're still waiting on court information, like Jeff has brought up on this one particular thing, we'll tell you that we don't have that information, but we are very responsive and we're glad to help you out on that. So Jeremy, you want to tell us about the other ways that folks can get in contact with us?
Absolutely. We are social media friendly. So we do have our, state Department of Revenue. We are represented on Facebook, Twitter or X, Instagram, LinkedIn, YouTube. So we do encourage you all to follow us on these channels. Especially YouTube, you'll be able to hear this entire presentation again. We try to get it uploaded typically within 1 to 2 days of doing it. And of course, you'll see here the phone numbers for the general tax line is 615-253-0600. Our registration unit is going to be the 615-253-0601. And if you have questions concerning franchise excise fonts, you can also dial 615-253-0700. We have support staff available to assist you Monday through Friday, 8 a.m. to 4:30 p.m., excluding holidays. That is Central Time. And upcoming webinars that we have next. So we have got next month, August 25th, the Tennessee Tax Resources for Your Business. We're going to be looking through all the resources that we provide for businesses that's going to be beneficial, helpful for you, kind of help with some navigation through that. In September, we have got a topic that often can bring a lot of questions, so it'll be a very good one to attend. It is the Tennessee State Single Article Tax. And so I see questions pop up about that all the time. Then in October 7th, we do have our next quarterly new business workshop. And you can view all of these other webinars, workshops that we've done just by going to the Revenues website and looking for the tax webinar section. You'll see them there. And then I have seen a few people asking about the CPE credit. So please take a moment to complete a brief survey upon exiting. And for those wanting to receive a CPE credit, for attending, you must answer yes to question 4 of the post-event survey and provide your name as it should be listed on the certificate. We only have 1 hour for this, and so we do hope we've been able to cover as many of your questions as you had, as well as just, go as in-depth on these topics as we could. We do want to thank Jeff so much, though, for his being here today. Jeff, very appreciated. You gave me a greater understanding of it, and I'm sure you did everybody else. So we appreciate your time, sir.
Very welcome. Thank you.
Thank you. All right. Well, on behalf of the Tennessee Department of Revenue, we hope that you all have a great rest of your day. Thank you for attending. Bye-bye.
Bye, everybody.